What a great panel. What great panelists. I think we'll start with the toughest question. You know, everybody speaks about FinTech, we celebrate FinTech, but actually numbers showing decline in FinTech. If we had in 2015 $46 billion invested in FinTech, we saw actually in 2016 a decline almost of 50% to $24 billion. And actually, if we look now at 2017, if it continued the same pace, we'll end up with less than $20 billion of actual investment in FinTech, according to KPMG. What I see is there's less M&A and less private equity investing in FinTech. Why do we have a decline? John?
It's one word, lending club. If you could imagine what happened in social media if Facebook had blown up, that somewhere along the line to its march to the brilliant future, Facebook had all of a sudden gotten involved in a terrible scandal. I mean, there were possibilities at certain points, but they seemed to avoid it. This could have had a very, very negative impact. And if you look at FinTech, in my opinion, it was led originally by the peer-to-peer lending sector. That's where all the money and all the activity, and if you ask people what was FinTech, it was peer-to-peer lending. And there was Lending Club, which, by the way, I was a very lucky angel investor there. I'm very, very happy with that investment. And then there was Prosper and, you know, SoFi and a host of others. But this thing blew up. And it blew up in such a massively sort of messy way. I mean, it's still around and it's still a public company and, you know, I wish them all the best. It really almost sunk the whole sector, in my opinion. And what's left are a whole bunch of really interesting things, such as blockchain and such as payments here and there. But all this stuff is hard and none of it has caught investor eyes, whether it's the broad public or even professionals like ourselves, the same way that the original peer-to-peer lending did.
Mo, I want to ask you, John, I think it's a fascinating observation. And certainly when we spoke FinTech, I don't know, 5 years ago, we were mainly referring to peer-to-peer investments and actually kind of like changing the bank or this disruption. More, do we really see this disruption now ending, or we just see kind of like more, as John described it, boring products, or do we see any other disruption in FinTech?
Well, I think if you consider just this past year, we discussed cryptocurrency or blockchain technologies as a small segment of FinTech. It's actually grew from $10 billion to $110 billion just in the last year. Okay. So we consider that, as well as maybe some investors being a little bit more traditional in their investments and still considering some Bitcoin technologies as more risky. And still relying more kind of like blockchain technologies, not necessarily relying on the coins, but still you see a lot of awakening in that segment of FinTech just this past year.
You know, David, maybe the question is for you. You know, I'm a big lover of blockchain and I can talk about blockchain all day, but to be honest, I think as investors we saw dozens of blockchain projects, if not hundreds of blockchain projects, and very few of them actually materialized to be a real product in the financial market because of the complexity, regulation, and elsewhere. Do we really have now this, I don't know, new moment for blockchain where we really see it being applied in mass scale in FinTech?
Well, funny enough, you should ask. I looked at this the other day. And I think that, can you hear now? Yeah. Okay, thank you. I got to be like a rock star. Kiss the mic. The idea basically that I saw in the statistics were that 2 years ago, of the top blockchain investments, portfolio of new companies, none had strategic investors. Last year, all of the top 10 blockchain investments had corporate investors. So that to me is a signal that the corporates are ready. Now, I had a conversation outside here in the hallway with someone very interesting. He was talking about the fact that the corporates seem to want to do sort of private, controlled blockchain, and then there's sort of the open source varieties that would be more public and disruptive to them. So that's probably going to be a battle. I think it's super early innings in a baseball metaphor. So we have a lot of opportunity ahead. And then I just had, speaking of relative amounts of money coming into the sector, more money came into the blockchain in funding for startups than into venture capital in the last quarter.
I see.
That's amazing. That's a shockaroo. ICU's outpaced venture capital investing.
Okay.
Total.
So are we going to actually, John, going to the model of, I don't know, the bank themselves or institutional investors actually invest in financial solutions which make their services more efficient or scale, or are we going to see this disruption by the small startup that's actually going to take a chunk of the institutional market? What kind of innovation we'll see?
No kiss. David mentioned this earlier. I think it surprised a lot of people. There's been a lot of, particularly in London, a lot of money flowed into B2C type businesses. And as an investor in a few of those, what we discovered was that the growth curves didn't look like traditional B2C and ended up looking more like enterprise, kind of 15, 20% growth rather than 25, 30% growth. Longer term amounts of money, lifetime value of customers were there, but it was much broader than a 12-month cycle. Acquisition costs were through the roof. There was a lot of money being poured in, a lot of people spoiled a lot of markets. And so there's a whole shift, and I think distribution channels which were historically thought to be, dare I suggest it, Google, Facebook, Twitter type models don't exist, and I think, or are much more difficult. And I think banks are now starting to get reasonable about their acceptance of being able to partner with these individuals. And through that process is actually create new distribution channels, and actually maybe the legacy platforms are those.
John, you know, there's actually many saying that Israel is a great place for the new B2C FinTech products, because it's a lot about kind of like advertisement and kind of like cost of acquisitions of a new customer. And actually in Israel, thanks to the ed tech industry, we actually mastered this field. How much do you see this merger between the ed tech and the FinTech actually materializing the potential of B2C products?
Is this working out? I'd love to see a lot more. And I think that most of the FinTechs that I see are not yet smart enough to do the sort of the ad tech and more the gaming. In other words, you think about what was driving ad tech in this country, it's the gaming industry, and you don't see that kind of customer-centric solo focus in the FinTechs. I don't see it, and I'd like to see a lot more of it. One of the things which is interesting to me is that I was on a panel like this in Singapore, and they asked the panelists who are going to be the biggest banks in 10 years from now, or I think it was 10 or 15 years. And you know what the answer was?
Same banks?
No. Yeah, it was Facebook, Google, Tencent, Alibaba. And that is, by the way, and on the panel were mostly banks, okay, or people representing innovation on banks and regulators and whatnot. So I think people understand that disruption's coming to this industry, and that the bank, and you know who actually understands it better than anybody? Is the banks. And the banks are now running scared in a way which I think makes it very attractive for us as investors and for entrepreneurs. And the shift, in my opinion, has moved away from B2C to B2B.
I see.
Okay? That people basically now, at least a lot of the entrepreneurs that I'm seeing, are, because of the fact that they don't have that laser focus on customer acquisition the way that gaming does, and they haven't really adapted all that ad tech stuff, and customer acquisition costs are so large. And the banks are now running scared and are open to innovation in a way that I've never seen before. I mean,
But
Mo,
I want to ask you,
If I
you
can just give an analogy, I think he's exactly right. And I would say, by analogy, sort of blockchain, the whole crypto area is to banking as Uber has been to the automobile industry. It's sending a shockwave tsunami through them, and they better get on board, or they're going to very, very much be left behind.
But you know, I want to a little bit challenge this assumption. You know, I think if 5 years ago, you know, we went to the forums and everybody was saying, okay, there'll be disruption in banking, banks are going to vanish, there are new players in the market. Actually, I think we saw the reverse. We saw that many startups tried to compete with the bank and ended up or teaming with the bank or actually being defeated by the banking application, which already have the trust relations, which already have the customer acquisitions, which already had the architecture. So, Mo, do you really going to bet on the startup that's going to replace I think we actually have three scenarios. Whether it will be a startup that disrupts the banking service, whether it will be the same banks that actually adopt innovation, or whether I think, as John kind of like suggested, that the big edtech players like the Facebook and Google and others were actually going to take the market because of their skills.
Well, I can tell you a few things. I was also last week in St. Petersburg. There was a huge FinTech conference going on there, very similar to Davos. Many banks, many government officials, et cetera. And the discussion was around how do you experience the disruption in the banking system. And it was very surprising to see that many of them don't see it coming. Many of them discuss the way maybe we'll be successful, maybe there is a disruption going to happen. Nobody's talking about the fact that it's truly upon them. And just over the weekend, for instance, in light of the frenzy that's going on in the cryptocurrency market, my husband and I, for instance, tried to buy Ethereum on Friday, and just think the banking system, it's closed. I have like a ton of money in my bank, I can't even move it, I can't do transactions over the weekend because the bank is closed. And not only that, it's only gonna be able to process it on Monday. What is that, like 3 days, like forever. So the thing is that they don't understand is that the need is gonna come from the market, and when the consumers are going to start voting with their feet and moving money around to places where they can actually have control, where they can actually decide what they want to do with their fund and how do they, take ownership of managing their own money. That's where it's really going to hit.
I think it's a great pitch for the startup community, and it's a great. But I remember still where Sir Martin Sorrell, he was addressed at the WPP as I think the largest, edtech person. He was asked about whether his business will be disrupted by the edtech companies, and he said, "I still want to see how you trade real dollars with digital pennies." And I think that's the game now with the banking industry. The banking industry will control 99% of actually the financial transactions, and there's a minor fraction by startups or by application that actually try, I think, to challenge the model. We haven't seen actually this shift that we're all describing in our pitches.
Can I ask everybody a question? Is anybody taking cryptocurrency in their venture fund these days? Are you taking crypto? Kol hakavod. Wonderful. Are you guys taking cryptocurrency?
No, we don't.
Yeah. You guys take it? Yeah. I mean,
We're the innovators.
good for iAngels. No, what's bizarre to my mind is that so many venture people talk about it, and nobody eats the dog food. Okay, except for you guys. Thank you. Or drink the Kool-Aid. A better analogy. One of the things
everybody said it's like sex in high school. Everybody talk about it. Everybody believe that the others are doing that. Everybody's rumors about it.
I got a yarmulke on my head.
It.
We're not going there. Okay, but the reality is, you mentioned before about. I don't believe that the banks are being destroyed. And in fact, in the last week, we just made announcements that we're distributing our crowd products through the National Bank of Australia, which is one of the top 25 banks in the world. We're working with Reliance Wealth in India. We've announced things with UOB in Singapore. We work with banks. We love banks. Please don't get the message that we are anti-bank in any way, shape, or form, because but what I do see is that these guys are focused on innovation in a way. It's funny that you felt that wasn't the case in Russia. I mean, and maybe I haven't been up there and I haven't seen it. But when Asia, these people are running scared. They get it. And the reason that they think that Facebook or Alibaba or Tencent are coming their way, first of all, Tencent's already sending more money with Tencent, gift cards than any bank in the world. And they basically, how often do you interact with your bank today? Does anybody interact with their bank today daily anymore? No. You used to go into your branch. You used to interact weekly. But you interact daily, multiple times a day, with Google and with Facebook. You have that kind of interaction and trusted environment. And for them just to go in to start handling your money is a no-brainer. And if the bank is only this sort of thing, which in America in particular has negative brand equity, right? People don't love banks very much. They don't have warm and fuzzy feelings. They're at great risk. So I think there's a huge opportunity.
Okay, I have two questions that
Can I jump into this? So I think the big elephant in the room here is the big consulting firms. Because no startup can go to a bank and say, can you implement my technology? There needs to be a bridge between those two organizations. It just doesn't, the API world doesn't exist in banking the way we would like it to. Sure. And the problem with those guys is they don't want to implement this stuff because it's going to carve out massive parts of their
They
business.
don't want to give up a AUM.
Correct.
Or
And
customer
so,
list
so there's
or-
this kind of ménage à trois going on, and one of the parties really doesn't want to play. And so therefore you've got banks on one side which have a desire and a need and can see the innovation, and there's startups on the other side that actually want to get into bed and do these things. But the reality is there's a real challenge bridging the gap between those two parts. And bluntly, venture capitalists are not the best people in the world to help support that. They write checks, they can tell you how to grow a business, but very few of them actually understand how to implement technology and actually drive that process.
Okay. I want to jump to something a little bit different, which I have a personal kind of like fetish to, and I want to see your point. I think it connects to something that John just said. We see now a trend that a lot of actually the risk modeling and a lot of actually prediction about banking products are no longer coming from financial data, as we used to see the credit scoring and kind of like prediction about the next product, but actually coming from your social activity.
Yeah.
We see actually, I think the most interesting project is in China, where we see actually the Chinese government do social trustworthiness scoring, which is a predictor both of your risk-taking behavior and product you are likely to take. And we see more and more companies actually thinking that it's much more interesting for banking services is to tap into your social records or social network
History.
records or social activity rather than tapping into your past financial behavior. How do you see actually that we build banking products or risk scoring products or predictive products based on social behavior or based on network behavior, not anymore about on financial records?
I think it's a very good question, and it's important one to realize because in traditional banking, especially in the U.S., much of the financial products do rely on your credit history and what kind of transaction history do you have with your bank. Now there's a whole generation now that's growing that doesn't necessarily have history, not necessarily good history or just any history, but they do, but have been active on social platforms since they were probably single digits, like 9-year-old or 10-year-olds today. So I think there's a lot of value in being able to, in a data-driven way, extract information and decision-making through social media history of a potential
So actually
customer.
the new products would come from the Facebook likes?
But for instance, even in peer-to-peer lending, I mean, we've invested in a company that this is exactly what they do. They try to, using smart algorithms and big data, look at your social information, look at your social history, social network, and try to define what kind of loans you can
But
be
David,
given.
isn't then becoming, just then we talk now about Amazon, that 50% of actually the retail transactions are happening on Amazon, that they have an unfair advantage with developing any commerce product. Do we have now the same phenomena with actually social activity and social products?
I'll come to Amazon in a moment, but just back to the thing, the first question. We, Bloomberg Capital, have invested in a number of companies that are using the social graph to sell data. First, they started to try it as a lender themselves, and it was in a developing country in Colombia, and it didn't work there for a variety of reasons, but then their data was valuable, so they started selling that to the banks. So again, it's not banks are going to win and everyone's going to lose, or everyone's going to win and the banks are going to lose. There's going to be this mixed format. The early adopters are going to see it early, and what's amazing for startups today that I don't think has happened in the past that was easy is the development of huge moats, barriers to entry based on data and the analytics of data and using AI and so on and the machine learning. So if you can start to get this data to grow in a new area and grab it and find the right partners, it's very powerful, not just in the consumer area, and especially it'll be powerful in developing countries where there are no credit scores. Think about that. So you have to rely on these other things. You can also rely on biometrics. One of our companies, BioCatch, here uses some of this kind of stuff for security, but it can also be used for credit scoring. Fundbox in the US is using some of the biometrics of how you fill in the form. If you fill in your name 17 times with cut and paste, you're likely to be a fraudster. So there's a lot of stuff that can be found in these massive data mining techniques. I'm very bullish about it. Now, just about the Amazon. Yes, Amazon has this characteristic where they know everything you buy because they cover every category. But there are other companies that, I'll name one of ours, Yotpo, that knows lots of merchants, hundreds of thousands, and they can cross-compare and sell and have data shared among somebody who's selling tennis rackets and tennis balls and tennis courts and tennis memberships.
Okay.
All of that can be shared.
Since we are very short on time, just last question for each one of you. I think in 2016 we spoke about the insurance tech, and that's actually the largest growing segment in FinTech, and actually can be even bigger than FinTech itself. What's going to be the largest or the most trendiest FinTech phenomena for 2018? What are we going to talk about in the panel?
I can jump into that one, being a boring European. GDPR regulation is going to have profound impact, and whether you can use that data and how that data is handed over and what that does in AI and machine learning, nobody has any idea.
Honestly, it's the first time that it's not a promotional for a law firm that I do from time to time, that someone's saying that legal services like GDPR, which is the privacy regulation, were going to be hot. So lawyers are coming. Lawyers are going to be hot in 2018. Go find yourself a sexy lawyer.
And I'd probably have to say the whole phenomenon of the blockchain is really going to pop this year dramatically.
I agree, and I think if we've barely cracked the tip of the iceberg of what we're going to see in the blockchain industry, and looking forward to 2018 to see.
John, as one who actually built many of the trends of latest years.
I think nobody is dealing with data at all. I think that what we were talking about or talking around in terms of there is so much potential in terms of harvesting and using this data. The banks don't have a clue. They have the data, they just don't know what to do with it. And I've seen a ridiculously small amount of companies that have ideas on what to do with it. And I'm seeing more activity in machine learning in medical and less, believe it or not, in FinTech. And I'm hoping that that's going to change. There'll be machine
So we
learning
had
FinTech.
the greatest minds and greatest panelists on FinTech. Thank you. So if we are looking to 2018, it's going to be privacy and regulation that is coming to beat your market. Out there, finally we see blockchain actually penetrating the FinTech market with some applied solution, or it will actually be a data-driven game when finally we're starting to do something with the data that we have. Thank you very much.
Thank you.
Thank you.